Welcome to the podcast, everyone. Today I'm joined by Kenneth Bach. Kenneth has been a long-standing client of ours and has been successfully profitable over a long period of time, uh, consistently. Fantastic to see. Great to share his story. We're inviting him today on our podcast so we can hear more from Kenneth and his strategy. So Kenneth's going to share a bit about himself, presentation, and we're all ears, Kenneth, and very eager to learn what
Thank
you have
you.
to offer.
Thank you for having me here. Great pleasure. Yes, I'm sitting in Denmark here right now. It's actually, midnight right here,
Yes.
so that's great. Well, short presentation. I've been in the financial industry since the mid 90s, where I started working for one of Denmark's biggest pension funds. And on the side, I have always been trading. Back in the day, about 2000, where you can trade with TD Waterhouse or whatever they were called, and
Yes.
started trading just for myself, just for the fun of it, and then all of a sudden, I started to get a little AUM from family and friends, and
Yes.
I think it was up till about 2010ish, where all the regulation was implemented in Europe, and we had to be regulated and so forth. And I hooked up with one of my good friends, and we created the first little hedge fund that was an investment advisor in Denmark. And we had a fund set up in Luxembourg, and we're regulated both places. But see, I'm a
Amazing.
trader, I'm an investment person, and I'm not an administrator. So after, I think, 2018, I sold my interest in the fund, and thought I was never going to trade again, because I was just so fed up with the whole market and everything. But then, after a few months, I started doing it again, and all of a sudden I was sitting again from Sunday night till Friday evening late. Um, and then I hooked up with BlackBull. I was a little reluctant to start with, because sitting in Denmark and
Yes.
trading with a New Zealand broker, regulated or not, it's pretty far away. But I
Yeah.
had good cooperation with you. You've been very helpful all the time. So
Thank you.
and now I
We were
trade.
quite young at that time.
Yeah, yeah, yeah. It was a young
Yeah.
company, but you had a good profile, and the support is always great,
Thanks.
and I'm really happy working with you.
Thank you, Kenneth. Well, do, would you like to share a bit more about what you've been doing more recently with your strategy? That's it's definitely
Um,
quite
I,
exciting.
I I keep trimming it all the time. It's running automatically, and it's been doing that for the last almost 4 years. But there's always, you can always tweak a little bit. You can always change a little thing here and there. And since this strategy is quantitative, and mathematically calculated, you can always tweak on this little screw here, this little screw there. And sometimes when you're talking about quant, which is a massive amount of data, a little tweak here and a little tweak there can make it or break it. And that's pretty much what I use my time for: optimization and tweaking.
Fantastic. In terms of your strategy, you mentioned that it's based on some quantitative measures. Are these algorithms you've built yourself, and
Yes, it
language
is.
that you've coded? Wow, that's
Yes,
fantastic.
yes, it is. It's made on the basis of what I used to do manually. And I,
Wow.
I just thought, instead of sitting here 8 hours a day looking at the charts, I might just, it's very mechanical. I trade very mechanical. And then I thought, well, why not just get all the data and then start back testing it? And it worked. And it was actually a big surprise to me, because sometimes when you write algorithms, the market change over time, and then all of a sudden your algorithm doesn't work anymore. So since I took the approach with the 7 majors and 21 minors, it's just a whole new ball game, because I can have one cross, 2 crosses maybe, especially the AUD crosses sometimes goes berserk, and
Yes.
and goes against me. Then I have maybe 5 or 6 opposite correlated pairs that takes care of it and hedge them off. And the strategy excuse me, you
run
fell out.
like almost a hedging.
Yeah, they are.
Yes.
It's not really meant to be a hardcore hedge. It just happens because when you trade these 28 pairs, they are intercorrelated, and they tend to move in ranges, either up or down, or sideways. So that's pretty much it.
Fantastic. I mean, from my side, I'm definitely keen to see your presentation as well. I know you mentioned you had a brief presentation that talks us more to the numbers. Would you like to start by sharing that?
Yeah, let me just start sharing. I use my FX book just to track it, in a nice way. So I'll just jump over to my FX book and just take a short tour right there.
Sounds good.
See this, everybody knows my FX book. I have had, a gain of 29.26% since February 17th. There's an absolute gain of 12.69. The reason the absolute is smaller than the gain is because this is on my MAM account, and I've been, I have a lot of capital coming in, and that just affects the absolute gain. I have had pretty consistently these numbers with 0.10% per day. I have an aim of 2.8 to 3.1 to 3.2%. That's my target every month, and I almost reached that. I've had a drawdown of 9.83%, but that was it was in June, where I had the regression point I'm going to show you later was a little closer to each other, and that caused that big drawdown. In the meantime, I've managed to just almost half it. So it the latest drawdown I've had is about 5.25%, which is manageable. At least I sleep better with that kind of drawdown.
Yes.
See, the next thing here is sorry. The next thing here is the statistics right here with the year, month, week. I don't make that much profit every day. I just tend to have a very small target of maybe 0.3, 0.4, 0.5%, but fairly consistently. Another thing I really like about my FX book is this little advanced statistic thing here, because I found something called a C-score, which is something that a quant like me loves. It's about probabilities. And a C-score is used just to calculate the ability of the trading system if there is a lot of wins and losses in streaks, and whether the pattern is random or not. I don't like random. I want something that's persistent, and this strategy has just shown that 99.9% is consistency, and if you hold that up against something like the profit fact. Oh, sorry again. The profit facts are right here. 1.4. 1.4 is not great, but if you look at it from a quantitative approach, it's pretty good, because if you have a 99.9% consistency with a profit factor of 1.4, that means that you can have 240 trades, 100 is losses and 140 is wins. And with the consistency of 99.9%, it's on over the last 8 months, 9 months, it just gives a great view of consistency. Like I said, the strategy here is built on a quantitative multiple regression forex trading strategy, and it's built by me. And I believe in quantitativity. I believe in mathematics. I believe in computer science, and I believe in common sense. And that's actually something I have from Jim Simons from the Renaissance Technologies. I'm a big fan of Renaissance, D. Shaw, Ken Griffin from Citadel. I've actually taken some of their approaches and just turned them some kind of retail, because we don't have the data power they have, but the approach is basically the same. You can, in this strategy, just to mention, I don't sell or lease out my EAs. I don't want to sell them. I don't want to have the service of it. I just run them by myself, and I figured out that that's much better. You can follow the strategy on the sub account here by a BlackBull, the BlackBull MAMP trade allocation system, where you have a sub account and I have the master account. I have professional status with the EU brokers, which means that I have a certain amount to trade with. I've done so many trades, and I've been working in the financial sector long enough to get that status. That means you can get from 1 to 500 leverage. You can get that anyways with BlackBull, but there are certain brokers that won't give it to you unless you have professional status. The best thing with BlackBull is it's regulated, and one thing that my clients like a lot is its segregated accounts. So there's full security by BlackBull. By BlackBull itself. The strategy here is I follow here is a quantitative and mathematical regression approach to the market based on mean reversion, and it looks like it's rocket science or something. It isn't. The difference of multi and single regression is just the amount of data points you track before you make a trade. Simple regression is just, for example, you have a level of it can be a stochastic or whatever, and you have one more point before you make the trade. That's simple regression. Multiple regression is just with 2 or more data points. So it is actually pretty simple. The strategy itself is pretty complex, because it involves 4 distinct algorithms, each with various rules and mathematical calculations to identify the mean reversion opportunities there is in the market. As you can see in these little points here, they vary on both sides of the reversion line here. But I'll show you how it works a little bit later here. The breakdown of the strategy and the components is shown right here. Every of the terminals set up on my server has 2 time frames. It's 28 pairs. It's the minors and it's the majors. It's set up on 30-minute and 1-minute time frames. It's 224 charts in all set up in these 4 terminals. Each terminal has their own regression points and their own profit targets, and are basically their own profit centers. And to begin with, the reason I set it up the way I did was you can only have, is it like 96 open charts in one terminal?
Wow.
So
okay.
I set up.
I didn't even know that.
There is. It was really frustrating to start with, because no matter what I did, it was just 96 charts. That was it. So I figured out that, okay, if I run the minors and the majors, and I run it in 2 time frames, it's only 56 charts. But then I have to have 4 terminals, which means that I have to have a powerful server running it. But it works. It works okay. So, as I said, I trade the majors and the minors. I have this KBFX Pro EA, which is an algorithm that I programmed, and there is a risk manager which takes care of the open positions and the take profit and the stop loss, and the whole system is based on just a standard RMI, relative momentum index indicator. That's the basis of it, and that's the basis of which the EA is programmed. Each of the EAs does not have any take profit or stop losses in them. People will probably say, "Oh, that's so dangerous." It isn't, because everything is controlled by the risk manager. The risk manager is looking at the whole terminal and looking after the single magic number. Let me show you how it works.
I also have a question while you do that. In terms of a MAM, sometimes it's important, especially to have a equal allocation of the trades. What is your suggested deposit level for any investor looking to plug into your strategy?
Oh, that's a good question, Anish, because I get that a lot. This is like I said, this is an institutional approach. So if a retail investor wants to follow this strategy, there has to be a minimum about 10,000 euros or $10,000, because when you have 224 charts open, I trade very, very small positions, but I have a lot of orders open. And in order to sleep well at night, you have to have that kind of money in your account. Also, because I'm only looking to get 2.8 to 3.2% per year. That's not enough for a lot of traders. They go for 10%, 20%, 25%, and then they crash after 2 months. This is a long-term approach, and it has this institutional edge on it. So I hope that was the answer to the question. I know it's a lot, but I would rather have people that has that amount in their account, and they have the approach that I have to the market, that it's an investment. It's not speculation. It's a long-term investment.
Yeah, fantastic. Oh, that's great information. Just in terms of your outlook on handling different levels of volatility, I think you've also explained that well with regards to changing market cycles and how your strategy reacts to that. So it's almost market cycle proof, as it were, to where it hedges on or trades correlated pairs to navigate those volatile times.
Yes.
So it's quite interesting, and how you've built the regression-based analysis for that. So just in regards to a strategy, it definitely fits everything an institutional investor will be looking for, in my view.
Yeah.
The realistic approach is you've got to have expectations managed, and it's not practical to think, or realistic to think, you're going to get 10 or 20% in a month consistently. So even the banks, I mean, even with interest rates sitting where they are, the best funds in the world probably only return 6 to 10% a year. So it's less than 1% a month. So anything above that,
there are some of the quants, they do it pretty good. Renaissance Capital returned, I think, about 60% last year. It's
wow,
on 10 billion euros, or dollars.
That's
sorry,
incredible.
Yeah,
okay.
It's a closed fund, and just for members of Renaissance Capital there. But see, the approach I have here is I would rather have a lower return on investment and sleep well at night. I mean, I could double the risk on this and make maybe 8% per month, which is, in my view, outrageous. I would much rather go back, step back, have some select investors that knows this is investing. This is not high speculation, and it just works better for me that way.
Fantastic. That makes sense.
The strategy utilizes these 4 separate terminals and 56 charts in each, and each of these terminals has implemented the algorithms with his own set of rules and calculation and entry points.
Mm-hmm.
The great thing about this is that especially lately, the Australian dollar, and I think it was the yen also, the 29th of September, I just had a really violent move because the US dollar yen hit, I think it was 150.
150.
And the Japanese National Bank had to offload 20 or 30 billion dollars, and all the yen pairs just crashed 280 something points in less than a minute. I was on the wrong side of the market on 2 pairs, on the New Zealand dollar yen and on the US dollar yen, but the algorithm could stand the pressure. Mm-hmm. And that was really uplifting to me, because it made me safe and ensure that the algorithms work and the intercorrelation and the hedging works.
Fantastic. And that's precedent to run for future shock events as well, because it's difficult to backtest for those types of things.
Exactly. Yes. All these black swan, mini black swans events, you can't calculate it, so it has to be implemented into the algorithm. But sometimes, as you know, currencies can, even the majors and the minors, they can move very, very violently in a short amount of time, and if you're just trading 3 or 4 different pairs, you can just be stopped out. You can be crushed by that. So it's much better to take a wider approach and have smaller lot sizes. So if something goes wrong, you can always get out of it.
Yeah.
You're not down with 30, 40, maybe 50%.
100% agree with that logic. That's really refreshing to hear. And to be honest, your the proof is in the pudding almost, because all the theories we talk about for what makes a good trader, you're talking our language there, and it's shown with a successful strategy. So I think that's why people will be drawn to this.
It's been, as you could probably have noticed here, the last 5-6 months, I have grown exponentially in regards to AUM, and it's from 2 things, and it's because the money is in their own account, which means that they don't have to contact me if they want to make a withdrawal or put some money in. They have 100% control over their money. And they can see it just grows slowly every week, every month. I told them, many of them, that they don't look at these daily statements. It's I don't like them because it gives the wrong impression of the strategy and where we are heading. But they do it anyway, So I just let them do it. I told them, look at it once a week, maybe once a month. You'll sleep better. But you know how it is. They get them in the inbox, and I can hear from them when I talk to them. They look at it every day. That's just the way it is. So. Well, back to it. The individual algorithms here are designed to identify these mean reversion opportunities in the market, and that's on every one of the terminals. I'll show you the terminals later, how they work in more practical details. They employ these techniques, statistical models, mathematical models, and methods just to make these decisions per terminal. Multiple regression points and mean reversion. The algorithm identifies these turning points and reversion points on an individual basis. And I use 8 data points, 4 visible and 4 hidden. As you can see here, this is just a normal standard relative momentum index that I have rebuilt. Normally, it's just with 2 lines. You have an upper line, you have a lower line, but I put in 4 more lines in each direction. And this is the levels. This is the first level, second level, third level, and fourth level. The levels are set to when there's low volatility in the market, they can only look at trades on the lower line here, the lower regression point. Then they look at candlestick formations. So it's totally visible what I do. The only thing I do that's not visible, which is my secret sauce, is a mathematical, a statistical calculation I do in the algorithm to define whether we're going to go long or we're going to go short. When an entry point is identified, the trade is added to the overall position. And what I mean by that is I have this, I'll show it to you just in a minute, but on every terminal has their own regression points. And in these 56 charts, they trade on these 56 charts, but they always add to the overall position. There's no take profit, there's no take loss, stop loss on the individual charts. It's all run by the risk manager. Right. Because if you go, sometimes I can have long positions and short positions in the same pair. Some of my followers, they're just like, what are you doing? But there is sense to the madness, because if it's long in one time frame and in one setup, it can be as short in another one. And let me show you what I mean here. Low data points indicates a high reversion, and high data points indicates a low reversion. That means if you have a low data point, the price is underneath the data point, which is the third highest or third lowest or whatever you call it, and it matches the candlestick formation in the chart. Plus, I have the statistical and mathematical calculation in the algorithm. If these 4 points are met, I'll go long. I will enter a position right here. Also, if it's on a lower regression point and the candlestick formation and the calculations are there, I'll go long. Here I have one position, I have another position. Both of them are adding to the positive side on that magic number. Also, if it's
Kenneth, sorry, are you able to share your screen so we can see what you're looking at on your chart?
Yeah. I'll do it in a minute. I'll just finish this one,
Sure.
and then I'll open up my my server, and you can see my
Amazing.
live setup there, and I'll point you
Yeah.
to the same thing. But this one also here is you know, this indicates a short, which is this is positive, this is positive, this is positive, and if you have these, I can have maybe 30, 40, 50, 60 positions open. They might go into maybe a 0.8, maybe 1%, maybe 1.2% drawdown, but all of a sudden it just starts to reverting back to the mean, which means that the whole trade basket of 60 open positions will just turn over, go from positive or from negative to positive, and as soon as the trade basket hits 0.3, 0.4%, it'll close the whole basket. We're out of the whole position. To do that, I have created this risk manager. The risk manager is, I'll show you in a minute also how that works, it looks at all the magic numbers in that specific terminal, and looking after these 56 algorithms running on each of the charts, and they have their own profit targets and they run separately. When a growth position reaches a certain profit target, the risk manager just closes everything in that specific number. And see, if I have on one of the regression points, I have a target of 0.25 target. On the other one, I have 0.5, and on the third one, I might have 0.3. That means that if I have 3 baskets closed in one day, I could almost reach 0.8, maybe 1% on one day, and everything is closed. I have no crosses just running out, you know, if keep falling or keep going against me. Everything is closed.
Fantastic.
Likewise, you know, stop loss is defined also by the risk manager, so that if something extreme happens, you know, it'll just close the whole thing off. But a lot of these points, and is kind of my secret sauce, because that's the way I run the algorithm. So I won't, you know.
No, it's good to. It's definitely great for us to hear the technical side of things, without you revealing exactly how you do it. I mean, we want to, you know, keep an element of mystery there for sure, because that's your secret, as you mentioned. But I mean, in terms of the logic, it definitely is worthwhile hearing. So
it's also, you know, the risk manager, you know, the account monitoring is looking at, I'm always monitoring the balance. I'm always, you know, monitoring the equity, free margin. You know, I as you have, you know, probably seen, you know, my margin is never even close to something that's dangerous. I mean, it's on too much on the safe side. I can monitor the drawdown on each of the terminals. Very important for me also to be able to assess the risk, you know, in one window. I have my current status, and I have the profit current. You know, if I'm up for the day or down for the day, it's just nice for me to know. But you know, it closes all positions and take profit in one magic number at a time. But let's you know, my results are verified by FX Book. You can go in, you can
we'll
look at it,
share,
you know,
that link.
And also have it on my website, so people can go in directly to see if they want to have a corporate account, you want to have a private account, if they're fund managers or whatever. Well, what I'm trying to do is have this institutional ROI. I want to have low drawdown. I want to have growing equity, and I've taken an institutional approach for retail traders, if I might say, because, you know, if you come to some of the big hedge funds, you know, they won't even talk to people unless they come with $1 billion. You know,
Yeah.
it's for retail traders. You know, there's not much opportunity in following a real quant.
For sure.
For more info, you know, and live charts updated by FX Book, you know, you can go in and look at my website. There's everything in there.
Sounds good.
Let's take a look at the at my.
Okay, cool.
See.
There we go.
What I will have here normally is I will have 4 terminals open on my server.
Right.
And what that terminal shows, this is my live account. See, I have the risk manager, and I am, I'm in profit actually of 90. I'm in profit of 100. But see, each terminal here has these 56 charts open.
Right.
And this magic number here correlates to magic number 2000. Magic number 2000 is indicating that, let me just find this one here, is the lowest regression point, which is the one I have right here.
Right.
And right here. And it looks at if there was a trade opened. Regrettably, I just have, how many trades do I have open? Do I have open here? I have four trades. You can control them. You can never get the market to do what you want, so
yes.
It would be nice with 50 or something. But that's basically the way it looks. Maybe I can just look at. I have actually something open right here. Just a small one. Here you can see that it's a buy position, and I know that with the magic number 2000, it'll be looking at the first regression point.
Right.
Here was. Let me just look at this one here. You see, the first regression point was right here. It's underneath the first regression point, and then there is a candlestick formation inside bar bullish, and it indicates a reversion in the price. It reverts, it goes up, but it only takes the position here because the algorithm has calculated that statistically, if this formation is shown here, it'll be safe to take a long. So this one is a calculation that's been seen maybe 10,000 times before mathematically. Right. And then you have the statistics. I know that I think I have only 60% right. So I know that if I have about 10,000 trades, I would have 60% chance of this works. And obviously it worked this time. And on each and every one of these charts, there is an algorithm, an EA put in on it. Sorry. Right here. And each and every one is calculated separately.
Right.
And everything here is monitored by the risk manager. So that's basically long explanation for.
Yes. That's quite fantastic to see, Kenneth. Thank you for showing us all the details behind your strategy. I mean, but from my side now, it'd be great for you just to let people know how they can find your strategy. Of course, if you're a client of BlackBull Markets, you can go on our lead and follow system and find the KBFX MAM account. But if they wanted to approach you directly,
I think it's called Kenneth Bach FX now.
Okay, it's the Kenneth Bach one. If they wanted to approach you directly, we'll put your website details in the link below.
Perfect.
And
thank you.
We definitely get some people asking you some questions in regards to your strategy.
Sure.
In
I will
regards
do
to,
what I can to answer.
yeah, your logic and the robots are, it's fantastic to see, very refreshing personally, and highly interested. Um, thank you very much for sharing it with us.
Sure.
But I know it's getting late as well on your side, so I appreciate your time so late in the night.
Yeah, I think it's 1 o'clock in the morning here.
Oh
But
man,
you know,
we
I'm high on life here, so it's good.
amazing. Yeah, the money doesn't sleep, markets don't
It
sleep, that's
doesn't.
for sure.